Hey traders and investors, Serge Berger here. Today let's have a look at Chipotle Mexican Grill CMG, the ticker symbol, a stock that certainly for many years has been a cult stock until it started completely falling off a cliff last year with a whole bunch of issues around E. coli and just a bunch of stuff hitting that stock very badly. Let me give you guys a little bit of perspective, and I'll tell you where I think the path of least resistance here for the near to intermediate term might be. So first of all, let's keep in mind that Chipotle, much like any cult stock, had just a dramatic rise, particularly off the 2012 lows that it hit here, where it started building a trend line from the 2009 lows. So what then started to happen, and this is again very much something that cult stocks tend to do, the stock started rising within what was a very big broadening sort of cone-shaped type of channel, and basically when you see these types of move happening, it's just a matter of time until the lower end of that channel tends to be revisited. This happens on just about any asset, any stock over time. It's just a matter of time. So that's what took place with CMG, and really from that perspective, we can still call it a mean reversion move as much as the company has had issues out there. So this was a very natural cause of a stock that was very dramatically overbought. Fundamentals no longer supported the rise, and you had those E. coli issues with people getting sick at the restaurants and so on and so forth. So the stock just completely fell apart and mean reverted back to the lower end, or i.e. its 2009 support line back here in January, and then started to bounce along with the broader market, but it's been showing relative weakness again. Now, the only problem with this is that when this happens, there tends to be a pretty decent chance that at some point we overshoot on the downside. So while this stock didn't shoot in the upside, it did give us three tests on the upside, tried to get to the bottom or tried to marginally overtake the upside here of this channel. Didn't quite do it, so that there's tends to be a good chance of an overshooting move to the downside. We haven't seen it yet. I think it might be in the cards. From a momentum perspective, um, note that bottoms down here tend to sort of more intermediate term bottoms tend to be made on a divergence, a positive divergence between momentum and price. So far, the low that we saw in January coincided with a new low in the RSI. Let me make this a little bit larger, which is just one of those momentum indicators you can use in the longer term charts. What you ideally like to see is a higher low in the RSI and a lower low in price, which again we've not yet seen, but something we saw, for example, here in 2012 when price made a lower low and the RSI made a marginal higher low. Okay, so that's something you'd like to see. Now, flip over to the daily chart, and we use our trusty 50, 100, and 200-day moving averages. That's yellow, blue, and red line for reference perspectives. Let's keep a couple things in mind. First of all, the stock came into a lot of resistance here in early March. Confluence resistance, horizontal resistance, 100-day moving average. All that led to a bearish reversal, classic bearish reversal, and now the stock is pushing lower again. What has happened though, if you look at the price action basically since January, while the stock rallied meaningfully, essentially what it's done is build what could be considered a head and shoulders formation that could push the stock to ultimately a lower low, so below those January lows. Earnings for the stock are scheduled to be released April 26th, so that is potential catalyst out there for the stock. So there are a couple of things one can do here. One could initiate a marginal short position in the stock, although it has traveled quite far already over the past couple of weeks. Maybe see what earnings do, and then based on earnings, if we bounce, one could then go in and start buying some puts if implied volatility allows it. So that's kind of what I would look to do here is maybe continue to look in the short side of the stock on any rallies, not necessarily sell into the weakness, but wait for bouncing opportunities to sell into. Ultimately, I think the stock has better support closer into the, I'm going to say, mid to high 300s, so that's what I'll be looking for here. But again, the stock to me does not yet look like it's done. It looks like it needs at least one more flush lower, particularly to on the bigger picture chart we looked at before, to satisfy that divergence in price and momentum. So it's not I don't think CMG is at a point yet where it needs to be bought blindly. I think it's something that needs to continue to be sold on rallies. Hope this makes sense, guys. Please like the video. Please do so. It makes a huge difference in my YouTube ranking. If you give us a like, then YouTube ranks me higher, and that gets me more views on the video. Please do that. Subscribe to the channel, and as always, folks, I will see you in the next video.